G'day everyone, my name is Damien Johns and I'm here with our special hosts that are here every single week and absolutely killing it in the space, Anastasia Gwikos and Jack Lewis. How are we, team?
Amazing, man. Yourself?
Yeah, not bad.
Not
Love and
bad. You've
life for
been
a Thursday.
traveling the countryside,
I have
living
been
the life.
traveling. I have been traveling the countryside. I went up north. You can only go up the coast or down the coast in this country. So I headed up north and met some people and some fellow traders, and it was a lot of fun, and it was really cool to meet more like-minded people, and we had a great time. So for those of you that were able to meet me, thank you very much. And yeah, we'll definitely be back, and we'll keep trying to meet each other all across the world, hopefully in time. Not just me and the people I've met, but every single one of you need to try and meet every single one of the other people online, because it can only be a benefit, right? So Jack, Anastasia, how's your week's been?
It's been good. It's been good. I've got my own private mentor outside of our group. So I've had a few calls with her this week, really set myself up for the next 90 days. And then jumped on that early morning call with David Hunt and Shane earlier this week. And that really just reiterated the importance of not trying to look for those massive growth steps, but just doing those small, little ones day in, day out, and just making that your routine to really develop yourself. So yeah, it's been really good. And then last night's call with Shane, just fire. That really inspired me. I put a comment in the section there saying that his speech there last night was on par with anything that you see on the events, and that was it's really true. He really gave it to us last night, to that vision, that diamond visions for those people that are here to build within the business. But even those that aren't, gives you some sort of idea that there are opportunities out there when you do put in the effort for the business side. The investment that we have at that level is just incredible.
So it's fair to say that if you want to get better, you've got to push yourself. Hey, that mindset thing sounds like it's been an awesome mindset week for you, man. That's awesome.
Yeah, definitely.
Anastasia, you're back from your world tour. You went down the coast. Well, you come up the coast and then you're back down the coast. Yeah, so happy days for you. You got to meet me. How good was that?
So privileged.
I know, right?
You
The pleasure was all mine, I promise. And the other 12 people that we were with in Brizzy, so that was awesome. How was the drive?
It was long.
Oh,
Very
this
long.
is a massive country. It's crazy. Dead set crazy. Hey, tonight, guys, we're going to go a little bit more casual with respect to our approach, not necessarily throw to Jack or myself to do anything. It's more a roundtable discussion tonight where we get to pick each other's brains, share some charts, talk some rubbish, whatever. So we're just trying a bit of a different style just for tonight. Maybe it'll stay, maybe it won't, but we used to do this. This whole show was born out of being on a late night call through the Christmas period, and it was a real awesome time to be able to just sit and chat. So one of the people that we've able to meet, who was actually our leverage host on Tuesday night with Lewis Bell and myself, was Mike Edward. Now, I've been on the call with Mike for the last couple of hours, just basically just nutting technical analysis, and me and him and Amber were there, the three of us, just throwing thoughts around and questions, and it was really cool. So something that Mike stumbled on was position sizing. Now, before we get to that, so a lot of people wonder, what does 20x leverage on a 13% trade mean? Now, Mike, I was listening to Mike explain his chart to us, and I just paused him and said, mate, you've got to get on this call, and we've got to put you on with an audience, because the audience will benefit from hearing what he has to say. So that's why Mike's here. It's actually about 2 a.m. or 2:30 a.m. I owe him 2 early rises now. Thanks so much, Mike. So he's done this for me Tuesday and Thursday night, so he'll sleep well this weekend. But he's stayed up. He's actually in Canada, and he's willing to give us the time. So what we'll do is we'll throw to him first. I just want to finish analysing the trade that he was just looking at. Mike, if you can just get that ready, and Anastasia, can you make sure that we can share that? He can share. I just want to. Mike was breaking it down, but I was seeing something in support, but also in opposition to what he was doing. So not opposition, I shouldn't say that. It's more support, but a different style of analysis. So I want you to witness the both of us bounce off each other and discuss that chart, and then we'll move on to the position sizing. So Mike, if I can throw to you, mate, to share your chart, and then we'll keep analysing that trade.
Yeah, hello, Damien. Can you hear me all right?
Yeah, man, you're good.
All right. Hello,
Got your
everyone.
lumberjack shirt on, as Aaron said before. Like it.
I've got-
That's coming from a lumberjack. Aaron, he takes one in that one, right?
I've gone full Canadian today for you. How about that?
Yeah, Canadian E.
Yeah,
So good.
Canadian.
E.
You should be able to see my screen shortly.
Yeah, got it.
All right. So you just want me to explain the position sizing?
Yeah. So pretend that we weren't on for the last 5 minutes, and no, don't explain the position size. I want to nut out this trade. So can we clear the chart?
Yeah, sure.
Can we clear the chart, and then the both of us go at this? And by the both of us, I mean all of us. So if anyone's got anything to say, turn your microphone off, turn your screen on, and jump in and ask a question, because Mike and I are about to have a chat for the next 20 minutes about this thing and analyze it for you. If you don't understand something, just jump in and say, hey, guys, can you just re-explain that? And don't worry about interrupting, okay?
All right.
This is what makes us better. So Mike's about to get better, I'm about to get better, and all you guys are about to get better as well. So this is what it's all about.
Okay, I didn't have too many more beers.
Get rid of your EMAs as well. Oh, beers or no beers. Thursday night's casual, mate. So let's just enjoy it.
All right. So do you want me to go from the top with this coin that I'm looking at?
Yep. So can you just explain what EMAs are on there? Let's go hog wild on this chart.
All right. So look, before I talk about EMAs, like I'm going to start like on the weekly is probably not too good on this coin. It's more. So let's start on the daily, right? So I'm looking at this coin, and this coin here is KNC USDT. Obviously, at the moment, Bitcoin has been trending down in a very similar fashion to this at all-time high, right? So I don't think it's a surprise to anybody on this call that we're in a bear market with massive drops, lower high, lower low, lower high, lower low, huge bear market. Right, so I have these three funky lines on my chart, and these are the EMAs. If no one's familiar with EMAs basically stand for exponential moving average. I got that right.
Yeah.
And really what that means is they're basically the average price of the coin or the asset that you're trading over time, and they change. So say, for example, you're looking at this on the daily. I have three EMAs on my screen. So the white line here, I'll just open it up so you can see it. The white line is the 50 EMA. Which essentially means the average price of the last 50 candles on the time frame that you're on. So because I'm on the daily time frame, that means that's the average price of the last 50 candles or the last 50 days. The yellow line that I've got just above it, kind of move this out of the way, that's the 200 EMA, which is that's the average price of the last 200 days on the daily, or 200 candles. And the third one is the 800 EMA, which is like a lot slower moving. That's the average price of this coin over the last 800 days. You can put a fourth one in here. There's room. I use the indicator is called 4 EMA. So if you're on TradingView and you're looking for a good EMA indicator, 4 EMA is a good one to use, because you can just add one indicator to your chart, and it has you can have up to 4 EMAs on it. I've set it up like this so that my white line is my 50, my 200 is my orange line, and my pink line here is my 800. You can set this, you can have a fourth one on here if you want, depending on your trading style and what you want to look at. But I typically work with those three, and they're the kind of three that I'm getting quite good results off of at the moment. They're from Brody. So I never used to use these until about 3 or 4 months ago. chatting to Brody in the masterclass, he uses these quite a lot on his scalping strategy, more so in the kind of smaller 15-minute timeframes. I've started applying them to some of the larger timeframes, and I'm starting to get some really good trading results off of them. So I know when you first look at them, if you're a bit new onto the charts, they can look a little bit messy, they can look a little bit confusing. So if you don't want them when you start, that's fine. It's just something that I've started to use in the last couple of months that's working quite well for me.
Can I just pause you there and just say that, can you just zoom out so we can see a little bit more of the chart?
There you go.
Have a look at the way price is hugging the line. Now the 800, which is the orange one, isn't hugging the line because it's actually a larger time frame, and therefore it's not going to hug something. It's kind of going to linger back, right? Think of a rope with slack. You can manipulate that better than a tight rope. Yeah, same thing. So when you've got 50s and 200s crossing over, you've got change in market structure on an EMA level. So what you've got is the golden crosses, where you can actually pick up where the 50 goes above the 200, and then it pushes, the 50 pushes up, which sits above the 200. Can you give us an example of that, Mike?
Here. See this here?
So see where it's crossed there? The 50, which is the lighter one, goes up and above the 200, which is the purple one. And it pushes long. It pushes long for a duration of time until such time as it changes structure. So you're using EMAs, but you're also combining that with your knowledge of change of market structure, come resistance. Like if we were to sit there and draw resistance and support lines there, the EMAs don't necessarily coincide with them, but the market structure will. So the EMAs can, don't get me wrong, I should make sure that I make that clear, but I want you to see that when the 50 goes above the 200, it'll push long, and when the 50 goes below the 200, it'll push short. The difference is, though, that when they're above the 800, there's more chance of a long if the 50 is north, and there's more chance of a short if the 50 is below and it's below the 800. So just be conscious of that. If you need me to explain something, here's your moment to jump in and ask a question if I went too fast or something, because I'm trying to make this a really combined lesson, which is worth tuning into. You've got also, so can we just, for the sake of the argument, Mike, draw some support and resistance lines there so we can see how the EMAs kind of ignore them but kind of respond to them at the same time, and then the support and the resistance line will actually respond to what the EMAs are doing and how their relationship lines up.
Oh, you're further up here, right? Where we've got some examples.
Yeah, like if you can draw a resistance line there, a support line below the structure before it changed at around 12,000. Sorry, it's 1.2. Sorry, my eyes are horrible. 1.2, yeah, around there. Yeah, so if you can draw a line there, and basically what I want you to see is where the EMAs are changing direction, how are they lined up with support and resistance line? Now, if you don't see that they are, then so can you draw a line right where you are there? Right where you just were, yeah, there. See that there's a cross of EMAs right on it. So when you get a cross and a resistance, I'm always a big believer in when support, resistance, trend lines, EMAs, etc. clash, that's where the action happens. But it's very predictable action at the same time. So the probability is in your favor when that happens, put it that way. So just be conscious of looking for those opportunities that don't always present themselves, but when they do, they're well worth considering all of your education and combining that into a trade. Sorry, Mike, carry on.
All right, thank you, Damo. There's a good point. So I'll just delete these and I'll kind of give you an indication as why I'm looking at this setup. So bearing in mind I'm on the daily here, right? So typically I don't take too many trading decisions, I guess entries and exit off the daily, but as everybody says in the chats and every kind of bit of education you'll watch within the Elevate Hub, you always need to be cognizant of what's happening on the daily. always start on the higher time frames. Like what the daily is telling you is a lot stronger than what the 4 hours telling you, a lot stronger than what the 1 hour is telling you. The higher the time frame, the stronger the message that you're going to get out of these charts. So,
And the
we can
further
see
you zoom out,
and the further you zoom out, the easier it is to try and find these
Yeah.
key levels of support and resistance.
Yeah.
When they break, you've got a lot higher probability of hitting a trade, which is what I'll talk about in just a minute, which is why I'm interested in this KNC trade right now.
and the question that I want to ask you all, and you don't need to answer it, and you can if you want to. You can turn your mic on and talk to me. Why do you trade the time frame you trade? And if the answer is because everyone else does, then what the hell are you doing? If the answer is because that's what I think I should, then what the hell are you doing? If the answer is because that's where I've back tested and that's where I'm most comfortable, that I can actually back test, log, journal, trade, win at a high percentage, then that's why I trade at that time frame. Then you're a dead set genius who one day will be rich because you've already got your trade plan in practice. If you're sitting there going, oh, you know what, I just do it because, then you need to stop doing it because and learn. You're going to potentially make a lot of money one day, but that's only going to come because you can play the damn instrument well. You need to be able to get that instrument and make a song, and that's your ability to trade, and that's your education. So just make sure that you're putting the time into backtesting, journaling, etc., to make sure that you're confident that the trades that you're going to take are actually going to win. Sorry.
What you say your piece, it's all good. Cool. Sorry, I was copying the link to Sammy, who's going to join in this as well. So, all right, I'll carry on. So look, I'm on the daily. Always start on the daily. Always keep in mind what Bitcoin's doing. But let's just talk about KNC right now and why I'm kind of seeing a long setup that I'm seeing on KNC and how I use, in my personal trading style, I use a combination of volume. I use a combination of market structure. I use a combination of EMAs. And, you know, I'm looking at a very, very zoomed out kind of macro level of the market to try and see if I can get a good trade entry, you know, which will give me some of the trades I've been kind of testing this strategy on over the last couple of weeks. I've been able to achieve anywhere between, you know, 120 to 200% a trade, which is obviously very healthy, very good for me. I've never been able to trade consistently at that level before. And it's a strategy that I've been kind of looking at for the last couple of weeks, which is working quite well for me. So I'll just delete these and we'll start with a fresh chart. So if we look at KNC, and you know, we've never looked at it before, it's obviously, it's been on this massive pump and it's just absolutely died since this is obviously the Bitcoin high. I think it was around this time last year, like April last year. It's fallen off a cliff and I actually thought it was going to die, right? I thought it was going to get delisted with a lot of other coins that got delisted in the last Bitcoin dump. But if you measure it from top to bottom, I mean, it doesn't take a genius to work out that it's lost 92% of its value, right? So it's as low as it's ever been before. It's at all-time lows right now. It's actually broken below all-time lows. The reason I'm starting to get interested in this in the long, obviously, if we switch to Bitcoin, I'm just going to look at Bitcoin very quickly, and I talked about this the other night on leverage, so I won't labor on this one. But it's very important to always look at what Bitcoin's doing. Now, obviously, if I clear this chart a little bit, I'll just clear these ones. We can see that Bitcoin's in a big falling wedge. Bitcoin's been very, very bearish, as everybody knows. We've actually just broken out of this falling wedge, and we're testing the 200 EMA here. And we're also testing this level of support around 21K, 21.5K. We're in an area of indecision, but basically we've gone from lower highs and lower lows. We've consolidated since November. This is why it's been terrible to trade since November, because nothing has happened. And we've actually now got some bulls back in the market.
Can I ask you to draw a trend line for me on that? Can you just zoom out just a little bit more? So can you just humor me and see if there's any sort of a trend through here? Just stop moving. Stop moving.
What? Top to bottom?
No, through there. Can you just draw that for me and see what that looks like?
Oof. Okay, let's try that.
I just see something. It may be wrong. Yeah. Yeah, no,
I mean,
it's
typically-
changed. That probably was a trend line, but it's kind of changed. So yeah, no, delete that. I'm just looking for the potential, because this is exactly the same as the adder trade that we had on the call with Danny and Justin. It was very, very similar to this in that it popped up. So what happened to that one was it's the, I think it's called the 13 EMA strategy or something. I'll have to confirm with him, but basically what it did was it came through that wedge that you'd drawn more on a bigger scale, and it then consolidated there. It came up, it kind of hovered, kicked out, and then went like that. So it's just might be worth giving this a fair watch as to how it goes. Like, it's very, very similar kind of setup.
Yeah, I mean, if you zoom out here, there's not really too much more of a wedge that you could draw in here. Like wedges, you normally draw from your lows, right? So
Yeah,
if that was your previous low and you're coming down, there's not really anything there, right? So your true wedge on your daily is here. You can see it. You got a low. It's actually started creating high lows. It's come back up. It's formed a lower high.
yeah.
And really, you're talking about equal lows. And really, if you look at this from a really macro level, we're in a big consolidation box here, which is a good sign, because we've gone from a massive downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. We're now flattening out. We're flattening out of the bottom.
But even if there is a consolidation period there, can you just put that box back? Even if there's still potential that's going to, and I say potential, do your own research, etc., that it's going to the top of the box.
Yep.
Because it's broken beyond the 800. Is it the 800, the orange one?
Orange is the 200.
So it's trying to break above that. So the fact that it's trying to do that could be indicating that, there's a bit of momentum there. So even if it goes up to the top of that box, that's still a decent sized trade.
Yeah, we've got a bit of room to trade in here, right? This is why this is kind of good. That's 25% unleveraged. So there's all sorts of, and every time, as we all know, you're waiting for Bitcoin to move. So right now, there's very limited trading opportunities while we're going sideways. If this thing decides to pull back a little bit, create a higher low, and start some sort of trend up to the top of this box, then there'll be all sorts of alt trades that we can take long in this area. Again, if Bitcoin's bullish, then alts will generally be bullish, is how the market's currently operating. Like today, obviously, a few people this morning would have caught some nice shorts. The reason why they caught the shorts is because on the lower time frames, if we go to the 4 hourly or even the hourly, and we get rid of this box and we zoom in, we can start to see that, we have this pump out of this wedge. We've come along sideways for a little while, and people would have seen this morning, these two bearish engulfing candles. And you would have got some, if you were watching the market at the right time this morning, you would have got some nice shorts, because there's two big bearish engulfing candles there. As soon as you saw this, though, as soon as this candle closed with a big wick to the downside, if you were in any shorts, you'd be out right now. You would have taken your profit and you would have been out, because this means there's still a lot of buyers here around this area, around 20K. So Bitcoin could quite easily shoot back up again. And on the lower time frames, from a market structure perspective, if we draw a box here, that was the previous low. You can see it there. So even though this thing has wicked down below it, we haven't closed below this previous low. So there's no bearish market structure yet. Like this, this is good. If you were watching the hourly, you could have got some short-term shorts this morning, but there's no trend right now. We've come up, we're going sideways, and until we either decide to break north out of this box, we're in line for some more longs, like we just discussed, up to about 25K. If there's not enough buyer strength there and we drop south out of this box, we may come back down to retest the top of this wedge and the previous level of resistance around 19K. So right now, it's pretty much a no trade zone right now.
Yeah,
it's
I was about to say the exact same thing. So what we've got there, can you just draw a line across around 21, sorry. Oh, Jesus, I need to go to the shop. 21, what's 21 look like?
You want something like that, like a horizontal line?
No, 21,000. If you can draw a line, a horizontal line. Yeah, sorry, at 21,000. Where, like, if you're look at where that is. right? So that's a short-term resistance. And I was talking the other night about psychological numbers, and 21,000 is definitely a rounded number. When you're dealing with $20,000, if you're negotiating in the thousands of dollars, you're negotiating per thousand. You're not negotiating per $35.70, right? So 21,000 is a significant psychological number. So what you've got there is the market structure sitting short term at 21,000, because that could create a lower high. Can you just draw that in for me? Oh, Mike's walked away. He doesn't like what I'm saying. What it could do is it could come up like that, in which case the long belief that you have, wherever it may go to, I'm just drawing this just for the sake of showing that it's a long, the projection of that, if it doesn't break through this, is a waste of time and money. So you've just got to be patient in the market. If this rejects off that, then you set your position somewhere down there to short it this way. So it's a matter of making sure that you're being patient. Mike just said it, I'm saying it. You've got to be patient to make sure that the trades you're taking are winners, because the more probability you have of winning, the more confident you are. There's more chance of me tossing a head than winning the lotto, right? So I need to make sure that if I'm going to put a lot of money on it, then I need to be right, or at least have myself the best chance to be right. Sorry, mate.
No, it's all good. So look, I mean, I guess in summary from that kind of little bit of a Bitcoin analysis, like if you're not in a trade right now and you've missed this kind of little bearish drop through 21K this morning, again, you're not in a trade, because look at this, it's going sideways. We could probably come back up to retest 21. You could maybe draw in fibs here, and you could say, okay, we might come back up to retest the 61, which funny enough is at 21.2, and head back down. We might break straight through it. This thing could go anyway. It could break out of this box north, break out of this box south. Right now, don't touch it.
Can I just pause you? Can I just throw two things at you? Number one, Morgan has said in the chat, tips to be more patient. I'll go first. You just need to understand, mate, that if you're putting $1 on this, it doesn't really matter. If you're putting $10 on it, it probably doesn't matter. But when you start to get better at this, and you're able, hopefully for you, you're able to put thousands of dollars on this little line on a chart on your computer, that you've just had dinner and you've walked into your office and suddenly there's money to be made, you need to be conscious that you need to trade it like it's $100,000. If you start trading like that, you will get your patience. I can't stress that enough. If you wait and think that you're going to lose a lot of money, because that's when your mindset will get in the place it needs to be, then you don't take every trade just because it's $1. That's the best tip I can give. Mike, you want to deny or support me on that?
Yeah, I think I kind of touched on this on leverage the other night as well. I mean, a lot of people that are starting out, there's various pieces of advice out there around, if you want to start paper trading, if you want to start, looking at your TA on the screen. Biggest piece of advice I would give is fund your account. So even if you're new and you can afford $50 or $100 or whatever you can afford, put money in an account and start trading live on a screen. It might only be $1, it might only be $5, but what it does is it starts getting your psychology and your mindset linked to your money going up and down on a screen. So, you can paper trade all day long and be like, oh, cool, I just made 100% on that TA trade. It's like playing poker without money, right? Your emotions and your trading style differs, and the decisions that you make differ when your own money is on the line. So even if it's only, trade for percentages. So even if it's only a $5 trade and you're gunning for 20% or 30% or whatever it is, having your own money on the screen and growing an account and understanding what it's like to lose money in account, your account balance going up and down, it will help you get used to your emotions that are connected to money. And then as you get more used to your emotions of winning money, losing money, watching an account balance grow, watching an account balance go down, it will help you get more comfortable the more money that you want to put in when you start getting a little bit more consistent. So I'm a big believer in, paper trading's great, I guess, if you're in your first couple of weeks. I'm a big believer in pushing yourself out of that comfort zone, You don't have to put thousands of dollars in, put 50 bucks in, put 100 bucks in, whatever you can afford, but put real money in, because it will really help you learn a lot about yourself and your own psychology and how you feel when you're winning and losing trades is I guess my piece of advice for people that are a bit newer. You're on mute, Damo, if you're talking.
Sorry, mate. Disclaimer, only put in your account what you're able to lose happily to keep living your own personal life, because you don't want to get to a point of greed or you're trying to replace something or whatever. You just need to make sure that you treat this as a hobby first and foremost at first, and something that you want to get better at. And you do that in accordance to your financial rules that you have for yourself. So just be careful with making sure that you're putting the right amount forward rather than overdoing it. And if you feel like you're doing that, then reach out to someone and talk to them about it. So, mate, can I just ask you, with respect to that, what's the white EMA? Is that the 50?
Oh, sorry, I'll go back on this again. So yeah, we got 50, 200, and 800.
Yeah. So the 50, you can see what I want you to see is that how the 50, it's bouncing off the 50 within the box. So you can see that it's created a trend. An EMA can actually create a trend. Like, it's not a straight trend line, but it's still a trend line, and it bounces off it. Break, retest, break, retest, break, retest, and then it'll fall through. And then what it's doing now is it's coming up to retest that 50 EMA. So just be conscious that if you are going to enter a position, and hopefully you're not, because we're kind of saying that you just need to be patient for a bit. Around here, you've got this area where it's going to come back to retest. However, if you try and draw a position on that, it's not worthwhile. And that's why people go down to the 1 minute, 5 minute, 10 minute, 15 minute. So what you can do, and I'm not saying to go and put money forward, but what you can do is you can use this opportunity when the coins look like this to go into the smaller time frames and actually have a look and learn for free. You can learn for free by watching what the coin's doing. Go into the 15 minute and go into the and spend 15 minutes on that and see where one candle goes, and then go into the 5 minute and the 3 minute and the 1 minute. Give yourself an hour of your day to go in and see what these coins are doing. And you need to understand that 5 1 minute candles is 1 5 minute candle. 6 5 minute candles is 1 30 minute candle. So you need to be conscious of how that works together, and you're actually able to read the narrative of the story. The way you can then get your superb entry point, if you're able to look at the coin all day long, is by simply watching it. And if you are able to watch it and you're privileged enough to sit at a computer all day, then good for you. And that's where you can make your money right on the moment that it happens. You hear stories about, Wall Street and all that shit, that people can make money the moment it moves, and that's because they understand it. And that comes from education. Gabriella, if we're trading above a certain EMA, we cross below it and we start to trade below it, is it not considered? Not necessarily, no. The EMAs indicate that there could be a change in market structure, but market structure is live and EMAs are delayed. You've also got market structure as candles, and you've also got market structure, you're relating EMAs to market structure. So there's a whole lot of it's like a roundabout that's got a whole lot of streets coming off it. You've got to be careful not to simply look at EMAs as market structure, but actual market structure, support, resistance lines, volume, CCIs, RSIs, Elliott waves, whatever it is that you use to do your analysis. You need to make sure that you're incorporating these things to give yourself the best probability of a win. Hopefully that helps answer your question. Sorry, Mike, let's carry on. Sorry, Gabriella, can I just ask before we move on, have I answered your question? And Morgan, have I answered yours about being patient? Or we, not me, we.
So what I'd also, I can't get rid of your lines here. Can you get rid of your lines?
Oh yeah, sorry.
Yeah. So what I'd also caution, if you're new and EMAs are a little bit confusing to you right now, just don't use them. Like if your focus is on learning how to understand market structure and understand technical analysis and candlestick structure, if I just take those EMAs off this chart right now, what would you see here? You know, you'd see we've got a high, we've got a low, which is the box that I drew before, lost my ability to speak.
And guys, you're all in the chats. Everyone here tonight. There's no people from outside, so jump on the chat and find the link to that that Anastasia put forward on Saturday, I think it was. So Anastasia, if you can find that video again and put it forward for everyone, that'd be good. Sorry, mate.
Cool.
Thank you,
All right.
Anastasia.
Look, if I, for example, if we're not using the EMAs, if we're not confusing things at the moment, and we're just going on basic market structure, we can see here, right? So it's the same, EMAs aside, we've still got a high, we've still got a low after this big pump. Bearing in mind on the bigger time frames, we're still bearish. We know that we've broken out of this wedge that we talked about before on the daily. So right now we've got some bullish action going on. We've got some buyers in the market. We're not shorting anything because we've missed this morning, and we're now trading. Essentially, if I delete that top one, we're now trading in this zone, right? It's a smaller box on the top one, but we're trading in this zone because that's essentially the last lower low. That's the last support that we broke through. Right now, we could go either way, right? You could draw a fibs on this, and you could say, okay, cool, we might retrace back up to the 50 or the 61, which lines up with this resistance, and then head further down. We might just carry on going straight down to this level of support. Basically, within this kind of box, anything can happen. So the EMAs, like market structure and candles, are absolutely king. So if you're learning, don't even worry about the EMAs now. My advice would be understand what these candles mean. Understand that this is a bearish engulfing. Understand that then that was kind of propped up by a bull hammer with some wicks, some buyers down here. We're now in a big area of indecision where buyers and sellers are kind of equal. No one really knows what's going to happen. We're going sideways. So if you zoom out, you can see quite easily here that we're going sideways. Trading in a sideways market is not a good idea. We've obviously had a lot of buying action here. Basically, the market's working out now. Are we going to go back down again and some sellers are going to step in and retest this level? Or are there enough buyers in the market to push this back up out of this box? It could go either way here. So you'll see it in the market. All of the altcoins and all of the setups that you might be looking at might look really, really good for the next couple of days or couple of hours, however long this is going to take. Obviously, at the moment, we're starting to print a bearish candle on this hourly, but it's got 46 minutes to go. So well, it's actually bullish. It's a really tiny. That one's already closed.
Just on the hourly that's about to close. Also note that that's the close of the 4 hourly. So you want to make sure that when you are looking at the Queensland time. So where I am, I can say it quickly. 6 a.m., 10 a.m., 2 p.m., 6 p.m., 10 p.m., 2 a.m. On that 24-hour cycle, that's the close of the candle. You need to be familiar with when the dailies and weeklies and 4 hourlies and hourlies close for you to be able to understand how candles, different time frames work together. And this 10 o'clock, which is 45 minutes time, whatever your time zone is the close of the next 4 hourly.
Or 4 a.m. if you are where I am.
Jesus. How's your commitment to the team?
So look, I guess
you're
in
gonna
summary,
hammer
I don't want to get stuck on Bitcoin too long because I wanted to just kind of go over a bit of a position size and why I'm looking at this other trade KNC. But it's really, really important just to make sure that you're always aware of what Bitcoin's doing. You should always know what Bitcoin's doing, whether it's just had a pump, whether it's consolidating, whether it's in a bull trend, whether it's in a bear trend. You should always know when you're entering a trade, because most of the altcoins, almost all of the altcoins, will follow what Bitcoin's doing. Bitcoin moves the market. So when you're in periods of indecision like this, in boxes where we're trending sideways, unless you're in trades from confirmations that you've seen before, you really shouldn't be entering too much in here because it can go either way. Like right now, you look at that and you say, that's looking pretty bearish. Huge sell volume here, big seller candles. You've got a bearish engulfing that's basically cancelled out the buyers here from this wick. But ultimately, we're still going sideways. We haven't broken this previous low. We haven't created a new lower low. There's no confirmation here that we're going to head back down again to 19. we could easily spin around again and go back up and break 21.5. So whilst we're in these sideways areas, you can see here, look, high, 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 low, high, 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 low, high, 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 low, sideways.
Hey, can we throw it out? Can we throw it out to the? Can you zoom right in on that and make it taller? Can we just throw it out to you guys? Why do you think it's a no trade zone? Can I just hear from somebody about why they think it's a no trade zone and what they're actually seeing? Someone who maybe we've never heard from. Oh, but if you want to talk, don't let me stop you. No confirmed market structure, right? Okay. That's true. There is no confirmed market structure. We could be guessing at market structure. What else?
I can't answer
consolidating.
it, mate. I can't answer it, mate, because I chucked a short on this morning.
Well, if you chucked a short on this morning, then you're probably doing all right. Yeah. So if you chucked a short on this morning at 21,465, then you're probably done all right today. So that's not to say that there's not trades there. That's just you just need to be careful if you're going for longer term trades, because you don't know which way it's going to go. If you're in the short term market, then happy days.
And this is where it's good to understand this, right? So say, for example, my time, this was 4 o'clock candle this morning, and this was the 8 o'clock candle this morning. I didn't get any of these. I was in bed. I didn't get up till late this morning, right? So I missed this. But if you took a short this morning based on this or the hourly candles you're on, you would have made some money between here and here, right? Because it's gone from the top of this box to the bottom of this box. But as soon as this 4-hour candle was closed with this wick to the downside, you're out. Because that is telling you that, you know, you might be in a short and you might be thinking, oh, the market's going to come down again. This is telling you that there's still buyers here from Bitcoin. There's buyers here that's popping it up above 20K. So you do not want to be in a short right now. This next candle has kind of invalidated that a little bit, but ultimately, while we're going sideways, someone else just said it there, there's no confirmed market structure.
Can I just?
This is easy, right? One, you can see it. That is market structure. That's market structure right there. So high, 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 low, high, 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 low, high, 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 low. That's why all the altcoins mooned last week, because Bitcoin was doing this. As soon as you start doing this, this is just chop, right? All these wicks, up, down, left, right, red, green, but these are crappy candles. Nothing's going up or down. These are just taking people's money. Any longs you're entering from here, any shorts you're entering from here, all these wicks are just stopping you out. They're just going to be stopping you out all week because it hasn't made its mind up which way it's going.
So can I just ask you a question? Well, I guess, can you zoom in a little bit further on the wick before it fell short? If you are, so zoom right in, and what I want you to do is, just for the sake of learning something off this chart, can you please draw me a short position? Are those two wicks here and here the same at the top? Are those two, is that wick and that wick in line with each other? Looks like it might be. Yeah, it is. Yeah. So what will happen is that, ever been in the position where you've gone short and you know it's going to go short because your analysis says so, and you've entered like that, and you've just been wicked out that tiny bit? Pump the chat if you've ever been in that position where that tiny little wick there has stopped you out. So what you need to look at is this chart as an example of the fact that there's still volatility around because there's buyers still there. So learn from that and think. So Mike, can you put your own explanation forward when I get to the end of this? Can anyone tell me why this candle happens and why this wick's so long? Can anyone kind of give some sort of an idea as to why that might happen? Yeah, liquidity. That's exactly right. It's the liquidity grab, because the education says put your stop loss just above the wick prior, and we all do it. But what you've got to do is say, okay, are we forcing a trade here? Are we trying to push too hard to try and find ourselves a 3-to-1? Is that actually worth trading? And if the answer is, well, maybe not, then don't. So give yourself that little bit more room. So when I say that, if you're a new trader, you don't want to be pushing more than 10x leverage because you just don't know how it works. So you just need to be conscious of how to be, and this goes back to what Morgan was saying, be patient both in trading, but be patient in your education, because you don't need to be an expert today. Don't look at the person beside you or your mentor or whoever got you in the space and go, oh, I want to be just like them, because you need to be able to earn your stripes. And, you don't go straight to a first grade football team, or you don't go straight to a professional level of golfer or whatever. You need to go and whack some balls, it probably didn't sound good, but you just need to be happy with the fact that you are where you are, but you need to have a drive and a push to get better. So if you're at that point where you know what to do, but you're not pushing yourself, then do it. Push yourself. Talk to people above you to say, hey, how can I push myself? And it's not necessarily anything other than your mindset. You've got your education. Your mindset's what's holding you back. So you make sure you clear that out and get that to where you want it to be. And that it might be losing some weight, or taking on a new skill, or finally learning that guitar and how to play the song. You could be you just need to get your mindset in the right frame of mind. And Mike, you've been around for 6 years, and you know yourself that you've gone in and out of confidence, in and out of abilities, in and out of form, in and out of, your belief in yourself. Would I be right?
Oh, I've had that this week, every week still.
Yeah.
You never really lose it. You just have to learn how to
and then you take opportunities like Mike took on Tuesday night, because I knew that it would be a banging call, and it was. And tonight's the same. And because Mike has taken. Tell me what you got out of hosting on Tuesday night.
Oh, I loved it. That was kind of the first time I think I'd ever really had the opportunity to have a call. I guess just to go over kind of the way that I look at markets from, my trading style, from kind of right from the weekly and the daily on Bitcoin, right the way down to how I look at it from an altcoin perspective. And yeah, like Damo said, I've been looking at charts since I started doing the course in 2018. So a good kind of 5-6 years now. And when you start, honestly, you look at everybody else and you just think, how am I ever going to pick these patterns? How am I ever going to work out what these candles are doing? How am I going to know how to use fibs and all these other different tools? And it's like anything, it's like learning a language. It's learning a new skill. The more and more time and practice you put into it, the better that you'll get over time. Like, you can't expect to be, a lot of people come into the space and want to make millions of dollars overnight. And to the very, very few, it's, that kind of moon Dogecoin, because that's what YouTube said, the very, very few 1% might get lucky. But if you want to be sustainable in this space, and you want to actually use this as, as your primary source of income, or at least, be able to be consistent at it, then it takes time. You got to put the effort in, like any other skill you'd learn in life. And yeah, it's good. I love being on the call. I love being able to kind of share what some of the setups that I looked at. And the thing about trading is that everybody's got a slightly different take on it. You can learn technical analysis, and some people like trading the daily, some people like the 4 hour, some people like trading like the 3 minutes and scalping. It's just, everyone's got their own little style of what you're doing. And you can be profitable and you can be successful no matter what time frame you trade on. So I like that, because we're all kind of learning the same core technical analysis skill set, but over time you kind of tweak it and learn your own kind of way of applying it to the charts. So yeah, I enjoyed it. I loved it the other night. It was great.
Yeah. So can we just wrap this coin up? Obviously this is Bitcoin, but I'm not going to ask you which way you think it's going, but based on technical analysis, it's holding high. It's holding high on the fact that it's pushed. It's not falling. There could be a possibility that it's changed market structure even now, because it's come down to support. It could reject off where it is now and fall through exactly like that. It's almost like I drew that myself. It's cool. And what you've got also is, maybe that's the bounce. It will come up and retest the resistance line and then push through and go in the opposite direction, which is a very realistic thing as well. It could come up, retest, and go out the top. You need to keep an eye on the volume. Everything's more, it's all subject to what happens, obviously. So that's why we say be patient. Can you just give a quick rundown on the position size for us, Matt?
If I was to summarize that, don't trade in the box. If it's going sideways like this, don't trade in it until it comes out one side or the other. Just watch. That will help your patience just by watching that. So look, I kind of went into Bitcoin there as a bit of a bit of kind of reference to you, but I wanted to go back to this kind of KNC trade that I'm looking at to give you a bit of an idea about one of the longs that I'm actually already in at the moment. And I'll give you a bit of a rundown why. So obviously, the last week or so, Bitcoin's obviously been on its pump. Most of the altcoins followed. KNC had a very strong pump here after being in this huge downtrend forever. If you look at this on the daily, which is what I'm on at the moment, identify key levels of support and resistance on the daily. So you can see that when we were in the downtrend, that was our level of support. If you look left, it's never been this low ever. It's an all-time low. You can see here it's bounced off about 44, 45 cents. And there's clearly some buyers kicking around here. Buyers think, all right, 44 cents is what I'm going to pay for KNC. That's the all-time low. We look back up here and we can see our previous level of resistance, which is around about 70 cents, 71 cents. If I mark my line in there, go back over left and have a little look left, you can see here that that's respected previously on the daily as a pretty solid, based on the data that we've got. Those are the last two touch points. So I'd be pretty confident on the daily time frame that that's a pretty solid level of resistance, and that's where our last level of resistance touched.
Yeah.
So the first thing for me that's told me that this might be turning around again, if we're looking at this, we've got a big downtrend. It's stopped going down. We've ultimately got a box again here at the bottom. We're consolidating sideways, and that box has been going since the 8th of November, which is when Bitcoin had its last big dump. So what are we now? 19th of January, 2 months, it's done nothing. Don't look at it, don't touch it. It's going sideways. If you trade the smaller time frames, absolutely, you probably find some little trades in here, some more shorts. But if you're looking at this kind of from the daily level, then it's basically consolidating sideways. So what's happened in the last couple of days is we've obviously had this pump. What this pump has done for me is it's pushed us back above this 50 EMA. For the first time since, when's this? September, right? So the first time since September last year, we've been above this EMA. That's a good starting point. We can start to see that it's gone from trending down. It's starting to flatten out a little bit, and it's actually started to curl around and move up at the bottom. If you look at the volume profile at the bottom, we've obviously got way more buyers in the market than we've had before. It's all largely red, pretty low volume. We've obviously now got some buying volume alongside some buying structure, some bullish candles, and we've actually a couple of days ago we've broken out of this structure, right? We've broken out of that kind of 71 cents, 72 cents where we were held, and we're stuck right over it now. So if we move down to, sorry, I'll just put in the next level of resistance. So now that we know that we're over this, right? We've broken over it 1, 2, 3, 4 days. We've now held over this resistance. And this is the key. So this last day here, we've got wicks to the upside, right? So we've still got sellers, indecision, and here we've got a nice, strong, bullish candle with a wick to the downside. That is a good indication on the daily time frame that's now going to hold as support. Bearing in mind, Bitcoin doesn't completely dump back through the floor again, and it will probably follow. So right now we've broken resistance on the daily time frame. We've held above it, and this bullish engulfing, because it engulfs these last couple of candles, is a good indication that that's now a strong level of support. So for me, we don't need that anymore because we're not in that range. Our next level of resistance that we're going to move up to was previous support. So it's around about 83, 84 cents. Now, I actually don't treat this as the next level of support anymore. So I would have the next level of support as here. And I'll show you why around about there. So if you think about this from a kind of a storytelling scenario on the way down, we're coming down, we're coming down, we're coming down. We've held, you see this wick here, we've held here around 88 cents. We've actually ducked below 88 cents there and created a lower low. We've come back up again. We've gone sideways, and then a really key tell for where your support and resistance is, and this works on all time frames, is the little wick right before you have these massive dumps. So you can see here that that wick is around about 88 cents, 88.50, something like that, which lines up to here. So you can see that we've actually broken through it once, come back up again, gone sideways for a little bit. We've come back through, and then the last bit of the buyers trying to push this back up again here are these two wicks. They've had enough and it's dumped through these levels. So whilst that would be your first target in terms of a long position, the strategy I've been using lately is actually to target a little bit higher up, because that is actually your level of resistance. This is just where it's actually broken through the level of support previously. Come back up to try.
Can you zoom out? Can you zoom out just so we can see if that actually lines up with something to the left?
So if we go back
Oh,
over here,
well, you look at that. There it is. Now, people say to me all the time, how far left do I need to go? And the answer is as far as it takes. Like wherever you can find something. Usually you can actually, to look left, you don't have to find something. To look left, you have to confirm something that's currently happening. That's the mindset shift. You need to confirm something that's already happening live as current price is, and then use your line to look left to see if you can confirm that what you're seeing is somewhat accurate, as best as accurate can get in this space, mate.
and you might not get it. You can see around this area there's quite a bit of noise. Some, you know,
Yeah.
some of these levels here are a bit lower, some are a bit higher. This was back in December 2020, right? So you're never going to get an exact level. So this is why it's quite important. If you want to just draw in, you know, you don't need an exact line all the time, particularly on the daily. You draw in this box around here, you know, and you can kind of like, you stretch that out. So this is obviously a long period of time before this has come back down to this level again. So you can kind of see, you know, same thing around this area. There's noise. It's between that kind of 88, 89 to 93 area is kind of your next box of resistance. So I don't really use ranges too much. I like to kind of pick a target and I just go for that target. But for me, the reason why I'm looking at longs on this coin at the moment is we've changed market structure. So we've been coming down, we've flattened out, we've actually created a higher high here previous to this higher high, and we've held above it. We're above the EMA, we've got good volume, we've got a bullish engulfing candle, and you know, again, as long as Bitcoin doesn't completely shit itself, we've got a good setup here for a next leg up to the next level of support or resistance.
And because it's a bearish market structure, if you go long on this, you only want to go long short term. So for those of you that don't sort of take profit on this position or a stop loss, you're a dead set goose, because you need to make sure that you're only targeting a little bit. At the next checkpoint, you can reassess, you can redraw that trade, you can exit the trade and re-enter it that suits your conditions. Don't think that you need to stay in a trade. There's no ego in being broke. So you need to make sure that you are only taking it to that level. Mike, for the sake of time, mate, I'm going to have to pull you up, but you and I are definitely going to chat again. We will get you back on with Jack and Anastasia again, and I will call on you if I ever need a host for leverage. The other thing too is that you also talk about position sizing. So
yeah,
can you just give us a really quick rundown on the numbers behind that? Obviously, everyone, this is not financial advice. This is just Mike's interpretation. So just be conscious of taking this as gospel. Obviously, you've got to do your own research and educate yourself on this, but this is Mike's interpretation of the way position size works, as well as leverage, as well as winning, you know, what you can project that you're going to win. So there's obviously more to it. We're not going to go into how to create position size. It's just more talking about percentages and leverage and how they work together. So there's more to it than what we're going to just give you a snapshot. And then if you want to learn more, I believe Mike's going to do a more detailed video on his YouTube page that'll be up soon.
Thank you. Yeah, so look, this looks a little bit messy at the moment, but what I'll do is I'll just kind of talk about, this is kind of a good example for an entry point. So if you don't know about bull flags, I would suggest learning about bull flags because that's what I'm trading at the moment. So a bull flag ultimately is a big push like we've got here. This is one that is a bit messy, but typically you'd then get a piece of sideways action where you create a pennant or a downwards wedge, which as we know from Bitcoin is a bullish move. We're waiting to break out of the wedge, hold above the wedge with some bullish candles, whilst also breaking the last high, which was here. And then we're looking to trade that up. So if I remove these and I'll just talk about position size, if we were to go long on this coin, right? So my entry long on this, and I'm looking at this from a bull flag entry. So for me, we've pumped up, we've come sideways, we've created a couple of lower highs. We've now broken out of this bull flag. These two candles here, we can see that we've created a higher high here before we had this big candle with a wick, meaning the sellers here. There's no more sellers here anymore because these two candles have broken over it. There's a couple of indications here for a long. You've got a big bullish engulfing. You've then got a new higher high, and then you've got two bull hammers in a row, followed by a bullish engulfing. So for example, that, let's just do the replay. That wasn't there. So you saw that, which is where I would take an entry off of. What I would do for position size is I'd say, okay, cool. I want my stop loss under these wicks, which is that's actually quite a big stop loss. And then my next target would be, you know, wherever I'm going to probably this wick here. So if I don't go down to the hourly. Now, from a position size perspective, I trade 20x. So I have a rule that I only based on my position size, I will only have a maximum 3% loss on my position size in my target here. So if I put this to 3% and I'm on a 10x trade.
Can I pause you? Can I pause you just for the sake of highlighting where you're looking? So the 3% is on the bottom of the red box. So can you just hover over the position size, and you can see that the 3% sits there at the bottom. You can see it changing right on the bottom red line. So that's what he means by 3%.
Yeah. So, and this will help you get your entries and your exits a bit better. So for example, if I'm on the hourly and if I'm trading 10x, then that 3% means that, say for example, I have $1,000 account and I risk 1% of my account. So I put $10 on that trade. I think I've got that right.
Yeah.
And then so what that means is if I have $10 on this trade, my stop loss being at 3% means that if I get stopped out, I'm only losing $3 of my $1,000 account. That's a 3% stop loss. Your next target for this trade would be somewhere around here, this next high. That's quite a nice trade, right? So you've got a 3% stop loss, you're targeting 8%. If you're on 10x, that's an 85% trade, and when you start hearing about people talking about risk to reward ratios, your tool tells you here. So that 2.77 basically means that's a 2.8 to 1 trade. So the target that you're aiming for and the profit that you're aiming to get is 2.8 times what you're willing to risk, is how that works.
So if you're putting in a trade and you're risking that 1%, which is $10, when you look at the projection of what you're going to win and what you're going to lose, if you're not around $10 and $30, if you're a 3-to-1 trader or whatever the maths is on your position size, then you've done something wrong. So it's important that you make sure that you get that right, because like I said, if you get it right while it's $1 and $3 or $10 and $30, you'll get it right when it's $100,000 and $300,000, and that's what you want. You want to get it right. So you want to do the fundamentals.
And that's really important, right? So if I go back go back out of this and go back to our trade at the moment. So say, for example, this wasn't here at the moment, and we said, okay, cool. We've broken out this flag. We've created a new high. We've got these two new hammers. Your stop loss is going to be below these wicks, right? That's where you put your stop loss so that you don't get stopped out. I'd look at that and I'd say my stop loss there, if I want it below those wicks, that's 4.2%. That means if I'm trading 10x, that's a 42% loss that I'm willing to take an 8% gain. So that's still a 2-to-1 trade, which is a good trade. I wouldn't take that trade because I have a rule in my trade plan that I don't have anything above a 3% stop loss, which means that that's too much for me to tolerate in terms of a loss. So this is where this tool is really powerful depending on what leverage you trade on, to start determining whether you'd actually take a trade or not. If
So
wanted to take-
are you saying that your risk to reward ratio is what?
on this trade, that's a 2-to-1 risk to reward ratio.
What's your trade plan tell you?
I take 1.5 to 1s, but I also have another rule that says I do not have a stop loss greater than 3%, so I wouldn't take that trade.
Okay, so if you, what carries more weight to you?
Stop loss.
Right. So the 3% stop loss carries more weight than the risk to reward ratio, yeah?
Because you don't know right now, Bitcoin could shit itself and fall through the floor. You don't know that you're going to make an 8% trade. You don't know it's going to make the next target. You're always, you're trying to be more conservative with your money than aggressive. The aim of the game is to stay long term, right? So for me, and everyone's different. Everyone's got a slightly different trading style. For me, having been burnt many times on many different trades over the years, I just don't tolerate having more than, because if it goes the wrong way and I've got my TA wrong, I know that if I get stopped out, I'm only ever losing 3% of what I've got onto that trade.
If any of you have ever lost a trade with leverage and your percentage is 99% or 70 to 78%, you'll appreciate how much that hurts. It's not a nice feeling. And even if you're trading with $1, it's still not a nice feeling because you lost hard. You lost hard and you don't want to lose hard. So Mike has worked out for him, and this is for him, purely for him, that system works for him. And obviously that takes into account all of him and his personal trading that he's not putting on this video. So don't come back and try and get us for giving advice, because we're just kind of talking about the fact that you need to put time in the market to be able to understand how it works and how it works for you as well.
So I'll just before I stop there, Damo, I'll just explain about how you get 20x trades, and if you want to get how you need to get better before you start upping your leverage.
Yes, please.
I can finish up. So I trade 20x, right? So I don't trade 10x anymore. I trade 20x leverage. So for 20x, this 3% stop loss that I give myself is halved, right? So this now comes down to 1.5, because when you're trading 20x, it's double. You can lose double, you can win double. So if you set your stop loss at 1.5% on 20x, that's the equivalent of losing 30%. It's just doubled 10x, right? And so you also win double, you lose double. So you can start to see here very quickly that the margin of error that you have for your entries gets a lot smaller. So you need to really have, when you've been trading a little while longer, you're looking for a lot more indications and where wicks are and where market structure is, on taking into account what's happened on the daily and the 4-hourly, but you're getting down to the hourly and the 15-minute timeframes to get basically more accurate entries. So in this example, I would have seen this break out of this wedge. I wouldn't have entered this because I would have waited for this retest and it would have fallen straight back through again with this big bearish engulfing. So I'm like, okay, cool. We've created new market structure. That's a good start, but there's sellers here straight away. So I'm waiting for it to come back up again. And I'm essentially waiting for it to break back over this resistance and hold. We're not diving back through the floor anymore. The sellers are gone. We're back over this resistance. We've got two nice candles here and a bullish engulfing. I think for this trade, I'm in this trade at the moment. I think I was actually right down on the 15 minutes. Here we go. You can see it. So we've had this push out. It's sold off straight away. We've actually started creating more higher lows again. High low, high low, high low. And this for me is where I use candlesticks in combination with EMAs. You've got the EMA crossing bullish. You've got two bullish candlesticks. I actually took my entry right here. And so you can see that I now have the opportunity to have a really, really tight stop loss of less than 1.5%, which meets my trade rules of nothing greater than a 3% stop loss. And I'm able to get into this trade and still target the next structure. So you can see here, it's hit this first structure here. I was over 100% earlier. I think it's just retraced a little bit now. I'm still fairly bullish on this coin. So if I make my next target up here, 10% is the same as a stop loss, right? So 10% on 20x that's a 200% trade. So that's my target for this trade. If I hit that, I'll be very happy. It's 4 a.m. so I don't know if I'll leave it open when I go to bed. That's obviously personal preference if you like to.
Well, can I just
trade.
highlight a couple of things there? You've got do you redraw your stop loss to allow for the 20x? Like I know that you said you put it at 3%, but then do you redraw it at 1.5 so it's actually true as to how you've drawn it as to what your position is?
Yeah, you have to. If you leave it at 3% and you type whatever that figure is into OKX or whatever exchange you trade on, then you're at 20x, you get liquidated.
Yeah, and then if you've ever looked at a position that you've been on leverage and been liquidated, and then looked at your chart and gone, but it didn't even get close to it. Now you've got the answer why, because you need to redraw your position size. It doesn't. I've been saying this for a couple of weeks on my calls. It doesn't actually give you the true indication as to where your stop loss sits. So you need to be able to understand leverage, and this is what videos like this allow you to do. So make sure you watch this over and over and over again, because you need to understand this. So can I get you to zoom back in? You may not have seen, there's actually a morning star on that as well, which gives you the indication. There's two hammers side by side, and the third, almost the fourth one, gives you the evening star, which confirms that we're actually got a bullish momentum. There's actually a crossover of the EMAs. There's respect to the EMA. It's bounced off a support line. So when you start to see all these things, because you've back tested, you can actually see how these things work. So yeah, that's really cool.
Damo, you're saying before about the leverage size between 10 and 20. Is there any way to put your risk reward on the charts to show that? Like,
no, you just have to understand. Like, Mike, you want to have a go at explaining that, because you've gone from 3x to 20x because 20x is double. Do you want to kind of elaborate on that a little bit?
So I think within the hub and within the area of the hub on Elevate, I think I think it's Brody or someone in there. There's actually a position size calculator, which is really, really helpful for understanding how much capital you have in your account, how much you should be risking at 1 or 2%, and then where your stop loss and liquidation points would be based on the trade that you're taking, on the leverage that you're taking.
Anastasia, can you get us a link to that, please?
I will try. I've never used it before, but I think it's existing somewhere. I will try and find it. For me personally, I when I started learning, I always traded 10x, right? And so for me, just if you've got a 3% stop loss, that's 30%. You just times it by 10. If you're gunning for a 5% target, that's 50%. And then this 1.8 in here basically tells you that's a 1.8 to 1 trade. So if your rule is I only take 2 to 1 trades, then you set this up. So you say, okay, my entry's here. I know where my stop loss should be. And my personal rule is 3%. That doesn't mean everybody's rule is 3%. You know, you can decide where you're comfortable having your stop loss wherever you want, basically. But, you know, you should really generally have it below the previous market structure. If you entered there and that said to me 4%, I wouldn't take that trade. If you're trading on, if that's the previous market structure you're looking at, because I'm looking at smaller timeframes on the 15 minutes, I'm happy to take that trade using that as my previous market structure, which means I can get.
So the question is though, how do you work out if you've got a 10x trade on a 3% position size? How do you work out where do you adjust your stop loss to?
So I go by percentage. So if I look at where my entry is, and if this previous wick that I'm putting my stop loss under is over 1.5%, it's not a 20x trade for me because it breaks my rule.
Yeah, but the question is, how are you going from 3% at no leverage to 1.5 at 20? What's the kind of the maths behind that?
Sorry, so the 3% is at 10x. So say it's 3%, that's 30% on 10x. You just times it by the leverage that you're on. So if this says 3% and you're on a 10x trade, say that says 3% and you're trading 10x, that means your stop loss is 30% of what you're putting on that trade. Yeah,
which is effectively a 3 to 1, isn't it? Or depending on the position size, north.
It depends where your target is. And so this bit in the middle of the box, this is really important here in the middle. This risk to reward ratio, that tells you So say you're targeting here because that's the next level of resistance, but your stop loss might be down here because that's where you say, okay, I want to be safe and I want my stop loss underneath that wick.
Yeah.
You actually then got a 4.25% stop loss for a 5.6% target, and your risk to reward ratio is only 1.3. So you wouldn't take that trade because
Yeah.
it's less than, my rule is 1.5. Some people's rules are 2-to-1. People's rules are 3-to-1. I take 1.5%, 1.5 to 1 trades minimum. If I charted that up and said, I want my stop loss there and I want my target there, I wouldn't take that trade because it's only 1.3. It's not the risk to reward ratio is not big enough for me to take that trade.
Yeah.
So this is where, and the more that you look at these charts and the sharper that you get with your entries, then you can start tightening these things up to where you're comfortable. But this is the 15-minute time frame, right? So if you're new or you're learning and you're sticking to the 1 hour or the 4 hour, then the easiest way to look at this stuff is, literally like if it's a break and retest of a 4 hour line like this, that's where I'd enter. My stop loss would be below that wick, and my target would be where this wick is. It's quite high. So that's a 2-to-1 trade, but because that's a 4.7% stop loss, I wouldn't take that trade because that's too big for my rules. I don't like anything more than 3%. So I just wait, and I may have missed that entry. I'll look for another coin. I'll look at something different because I've missed that and it doesn't meet my rules. You see what I mean?
Yeah. Has anyone got any questions for Mike? Now's your time to ask.
It's 4 a.m. It's bedtime soon for me.
Gabriella had one in the chat there.
Okay. Mike, do you use trailing stop loss before leaving the PC?
That's a good question. No, I used to. I've played around with it before. The style I'm trying to implement now, which is more of a mindset thing for me, is if I leave the PC and I go to bed, I either make the decision that if I'm in a healthy amount of profit, I will move my stop loss to an area that I'm comfortable with, or an area that's below previous structure if I'm in a long, or above previous structure if I'm in a short. Or if I'm in a healthy amount of profit that I'm comfortable taking profit with, I'll just close it. And the reason that I ended up doing that now is the amount of times over the years I've been in very, very healthy trades and gone to bed and woken up and I've been stopped out. It just messes with your mindset. You could be anywhere from 20, 30, 40, 50% up when you go to bed thinking, oh yeah, it's going to meet the next target. And then the market reverses overnight while you're sleeping and you wake up and you're stopped out, and then you just end up being angry and pissed off the next day when you start trading. It messes with your psychology. So
yeah, sometimes it's right place, right time as well. Like, Mike, you're in profit, yeah?
Right now I am, yeah.
So your mindset's saying what before you go to bed?
So I actually entered this trade off of some lower time frames. I got a very nice entry down here somewhere. So I'm about, what am I at the moment? I'm about 140% in profit right now on this trade. So I will close that and go to bed.
Yeah. So
even though I'm from a bull flag perspective, I'm looking at this and I've got some really aggressive targets up here. That's, if I get that target, that's 400%. How often do you get a 400% trade? You don't need a 400% trade. That's greed. I've learned greed is your enemy over time. So I'm 140% up. I'll close it. I'll go to bed and I'll find another trade tomorrow. And
it could be that you re-enter this trade tomorrow too, yeah? Because it's done what you want. It's done what you wanted to do overnight, or it's at least gotten to a target where you're actually more comfortable. You ever missed out on a job and then got a better job, or you ever lost a girlfriend and found a better one? So I say that with respect, by the way. So you've got. So
it could come down and come back up again. You might get another re-entry target. I might take my 140% and I might go to bed and I might wake up and it might do this. And I used to get super pissed off because I'd be like, oh, I've missed like a 400% trade, but that's just greed. There's nothing wrong with 20%, any 20% up to 140, whatever you take, like profit is profit. And so I would rather go to bed happy in the knowledge that I've sat at a computer and pressed a couple of buttons and made some money, and then woke up the next day and done my analysis all over again and kept my mindset, rather than wake up in the morning and feeling like I've lost out and starting the day feeling bad because I feel like
Yeah.
I'm trying to bounce back what I've lost.
And this is a part of winning and losing, going through, getting that anger feeling that you missed a chart, missed a trade, didn't get the entry, could have won more, didn't win enough, got stopped out, whatever the emotion is, you've all been there. So you need to channel that and say, okay, what does that mean for my mindset now? The mindset that you had 6 months ago versus the mindset now versus the mindset in 6 months are going to be completely different things. So why not just live in the moment, you know? Take the trade and close it if you're going to bed. And that, I mean, by all means, if you're confident enough to leave it open, then do whatever suits you. But a couple of quick ones. If 10x is 3%, then 5x is 6%.
Yep, and again, that's just my rule, right? So you don't have to have a 3% stop loss. That's just my
But using your way,
right.
that maths makes sense. Another quick one. Why 20%? Isn't it less risky to have a bigger position size with smaller leverage? Yes, absolutely it is. 20% is something that I'll answer for you, Mike. It's something that Mike has journaled and used over and over again to get to his sweet spot. So 1.5% ratio, 20% trade, that's his sweet spot, because that's where he can win profitably and win well. So that's is that right, Mike? Just to keep going.
Yeah, I've traded 10x for years. I mean, for me, I've only really got into 20x in the last 6 months, mainly to try and I'm comfortable there, and it's where I spend a lot of time on the charts, and I feel like my TA is accurate enough to be able to get me 20%, 20x entries.
Yeah.
I'm still looking at, if there's trades where I see a good setup like this and the stop loss for me is like this, it's 2.4%, 2.5%. I'll still enter the trade, but I may just enter the trade on 10x instead of 20x. There's nothing stopping you from switching between leverages based on essentially where your stop loss is placed. And you'll start to learn that when you get on the charts more. So this is actually not financial advice, but I mean, if anybody wants to put KNC in their watch list, if we look at this on a 4-hour chart and you ignore the entries that I got a bit earlier down, you can see here that there was a push. We were stuck at this major level of resistance at 0.76. We've done nothing for the last week with wicks up the top. We can't get through it, can't get through it, can't get through it. We've actually, in the last 4-hour candle, just pushed through it and created a higher high. We're now coming back and retesting. If this retests above this line with a wick to the downside that shows you where to put your stop loss under, do your own research, not financial advice, but that might be a trade you might want to look at up to the next level of resistance, or maybe up to this level of this 800 EMA that's coming down. So this is a classic bull flag. You've got a big push, you've got some sideways action. It now looks like there's buyers back in the market with some volume at the bottom here. Depending on how this closes in 1 minute, 25 seconds, depending on your risk to reward and your own analysis, this may be something that may push up to the next resistance around here.
Mike, let's call it there. I do appreciate, we appreciate all that what you've put forward tonight. A lot of information. I do hope that you're able to watch this recording back, everyone. Mate, you're going to get a YouTube channel happening.
I like Bitcoin. You're going to give me a Bitcoin?
Yeah. So we're going to get your YouTube channel up, and this will be video number 1 on that. So, so all of you that have joined in here tonight, you've witnessed Mike doing his thing, which is really, really valuable. A lot of the stuff that he talks about is kind of further development on what the education says. So, Mike, on behalf of Anastasia and Jack and myself, it's been a privilege. We're actually going to stay on, but we're going to stop the recording. We look forward to seeing you again, my friend, and all the best.
All right, good stuff. Thanks for having me. Appreciate it. I'm going to bed.
Anastasia, if you can just